The broader market has been crushed since the beginning of 2022, and the QQQ, the Nasdaq ETF, is down over 32%. So we are talking about a substantial downturn, but substantial downturns also bring substantial opportunities. My name is Chris. As usual, super happy to see you here. With no further ado, let's jump right into it. 2020 and 2021 have just been crazy for the stock market, and we've seen incredible overvaluation in a lot of companies. But slowly, the stock market is coming down to more normal valuations this year, and that is putting a lot of fear into a lot of investors. But I have to say, generally, if there's a lot of fear and a lot of fear mongering by, different individuals, is probably the best time to get invested, because now you can get companies at a much better valuation than you were able when everybody was very positive and very bullish on the stock market. And in general, that is my philosophy on investing. I'm a value investor. I want to buy companies when they are at a good value and not when they are super hyped up. So in the last few weeks, I've bought two stocks that I want to dive a little bit deeper into with you guys, and I want to explain you my thoughts on why I bought those companies. The number one stock that I'm buying at the moment is Alphabet. I'm very convinced in Alphabet, so the parent company of Google, that at the prices where it is at the moment, at roughly $90, it presents very good value. It's down almost 40% since its peak at the beginning of 2022, and since then, it has been declining steadily. And at those levels that we are now, I start to deep dive into those companies and see if it makes sense, to take a stake in them. And Google at the moment does look like it's good value. Now, just to keep it short, Google's business model is very lean and straightforward. They're selling ads for companies on their platforms, right? So they're doing that through Google Search and through YouTube. That's where the majority of the revenue is coming from. And additionally to that, of course, they're also running their cloud services. Revenues for the company are consistently increasing. We see from 65 billion in 2021 to 69 billion in 2022 for the same quarter, so quarter 3, right? But we also see that cost of revenue is also increasing, and they are actually increasing a little bit more than the revenues. And due to that, we see that income from operation is dropping, as well as net income is substantially lower than it has been last year. Due to that, of course, investors are worried that this trend will continue, that maybe even revenue will start to decrease, costs will increase, as especially the US is still fighting against inflation, interest rates are rising, and if the economy really dips into recession, that might actually happen to Google. And that's why investors are selling the share. But in my opinion, I do believe that it's an overreaction from investors, and I don't think Google deserves a 40% discount to where it has been in the past. Because even though net income is slightly decreasing, we can see that net cash from operating activities is still increasing. So there's still a huge amount of cash flow in the company. And of course, they do have some purchase of property and equipment, so capex of roughly 24 billion. But in total, they still got roughly around 33 billion in free cash flow. So the company, in fact, is performing very, very good on a free cash flow basis. And from my point of view, sometimes I believe free cash flow represents a company better than earnings, because in earnings there are a lot of non-cash charges and stuff like this that I don't really mind that much, but cash flow is really showing what's going in and out of the company in hard old cash. And we can see that Google agrees with me on the point that the company is at a good value at the moment, because Google is having a huge share repurchase program of, have a look at this, incredible, of 70 billion US dollars for Class A and C shares. So they're pledging 70 billion in share repurchases because they have a lot of money and they don't know how to expand. They don't know what to do with all of that money. So the best thing they can do is buy back shares. And at the price levels we are at the moment, that is just fantastic, because if I feel the value is good to buy shares, I'm even happier to see that Google also believes so. And we see that so far they have bought back 43 billion in shares, and they're still committed to buy back another roughly 30 billion in shares. And we can see how they buy back shares here very well. In the middle of 2019 they started, and since then we have that acceleration of buying back shares. So from roughly 14 billion to almost around 13 billion. So they bought back roughly a billion shares outstanding. And that's really, really good performance, because my piece of the pie is just getting bigger and bigger with every share they buy back. And I feel Google definitely has the right to do that. There's no issue with that, because if we look at how much cash and cash equivalents they have, I mean, we're talking 116 billion in cash and cash equivalent. And what to do at the moment in the market than, buying back your shares. All their business lines are very, very, well operated. They're doing very good business. They are profitable. In fact, they have a profit margin of 23%. So extremely stable, extremely good business, And yeah, I mean, just go ahead and buy back shares. Fantastic. I'm totally happy with that. By the way, if you enjoyed the video so far, don't forget to subscribe and smash that like button. Now jumping over to the second stock that I bought, which is Amazon. Yes, I did buy Amazon. I bought roughly around 5 shares, so a small position, but also here I'm planning to build up my position slowly to become, bigger over time, and to dollar cost average down into it. Now, why I just bought a smaller portion in Amazon is because I believe that Amazon is at the moment more aggressive and more risky. And I believe that with a little bit of more conservative investment such as Google, you'll probably get better through the next 1 or 2 years. So in Amazon here, just a small position. If we look at Amazon compared to Google, we see that Google has a net profit margin of roughly 23%, right? It has come down a bit, but Amazon has a net profit margin of roughly 2.5%. So we see that if something happens in the market, Amazon will be unprofitable much, much faster than, as example, Google. But nevertheless, I do believe that Amazon is an absolute market leader, in e-commerce. They are still expanding, and they have a huge moat around them, right? Because to build the infrastructure and to build the business that Amazon is operating at the moment is not easy. And it's not going to be any competitor anytime soon that can reach the scale of Amazon. So Amazon is operating in, a really nice mode at the moment. But the problem with Amazon, and why I just invested a little bit, is because to keep that moat that we've just talked about, Amazon has to invest a huge amount of money every single quarter. And we can see that the best here when we look at liabilities, right? So we currently have long-term debt of 60 billion US dollar, long-term lease obligations of 70 billion US dollars, and other long-term liabilities of 22 billion dollars. So with whatever anybody wants to say, Amazon is really, a cash burning machine, because they have to invest a lot of money as they want to expand. They have to, build new fulfillment centers. They have to, set up all the cloud business, the Amazon Web Service business, and so on. And it just costs a lot of money. And how does Amazon finance that? Well, a lot of it, of course, is with debt. They're at the moment not issuing more shares, but the debt is increasing. And it bothers me a little bit, because Amazon is spending roughly around 300 to 400 million US dollars per quarter on, actually maintaining that debt and paying back, interest on those debt. And it's a lot of money that they could use otherwise. Now, of course, to be fair, they do also have a lot of cash and cash equivalents, right, of 35 billion US dollars, which is obviously a ton of money. It's a lot, but, it just dissolves if we compare it with the debt that it has at the moment. And additionally to that, we also see that Amazon is extremely free cash flow negative. So we see they actually have an outflow of almost 30 billion US dollars in free cash flow. And that comes not because the business isn't good, right? The business is fantastic, but it's just the investment that they have to put into the business to just keep it going. And that bothers me a little bit. And I'm not buying Amazon because of the financials. I don't think the financials are, exceptionally good because of the points that I just mentioned. But I'm buying Amazon because of the moat that it's having and because of the potential growth that it's having. And in my opinion, Amazon has done, some bad decisions. They've wasted a lot of money on their, online streaming and this kind of stuff. I think it's unnecessary. They're buying a lot of other companies. They're really putting out a lot of money. I think they're very aggressive, and that's why also I'm a little bit careful with Amazon, and I'm not going full in like I did as example with Google, which I'm much more comfortable with investing in. And I think that's one of the key points here that I want to bring over in this video is there are companies that are fantastic and there are companies that maybe are not that good, right? And as long as you feel comfortable with those companies, take a small stake, right? Let's say with Google, I feel very comfortable. So I'm really going in, I'm really buying more shares. I'm very convinced that the company over the long term will perform very, very good. But you see, even though with Amazon, I think that the company has, some problems and maybe it's not the best company. I think at the value at the moment, probably is not bad. So I'm just getting a small position and I see how the company actually develops over time, and I have the chance, to sell it or to dollar cost average in over time. I hope you guys enjoyed the video. If you did, please don't forget to subscribe and smash that like button. Thank you very much.